What's up, traders? It's Edson here, back with another video designed to inspire and to educate you on your trading journey. So this week I had a winning trade that could not have paid out any better. It is one of those moments when sticking to your strategy actually pays off big time. Today I'm walking you through everything from how I spotted the setup, planned my entry, managed the trade, and locked in the profits. This is not just about celebrating wins, it's about learning from them and applying those lessons to your own trading. So let's dive right in. As you can see, guys and girls, we take a trade on volatility 50 index and it was a buying position, and we looked in the profits at a risk reward ratio of 1:9. So the question comes, sir, how were you able to spot a buying position while clearly the market had been moving on a downtrend direction? As you have always been saying, for you as a day trader, until you come to a conclusion whether you are buying or selling this market, all the informations have to come from the highest time frame. And for us as day traders, our highest time frame is always the daily time frame. We do not go to the weekly time frame. We never go to the monthly time frame. Just the daily time frame as our highest time frame for the day is enough. So on the daily time frame right here, let us view the way this market had been moving. Let me shift to the line graph so that I can see the market in a very clear way, because on the line graph, there are no any manipulations from the candlestick. You can see there are no wicks and nothing so ever, just a clear market structure. If you prefer to view the market structure on the candlestick vision, it's also good. But for me, for clarity, for my eyes, I like viewing the market structure on the line graph. So on the line graph right here, you can see the way this market has been moving. Even a beginner trader who has started trading yesterday can clearly tell you that this market had been moving on a downtrend direction. So let us remind ourselves how the market is supposedly to move on a downtrend direction. And that is very simple. Just a series of lower lows and lower highs makes that market to be termed as moving in a downtrend direction. So based on this illustration, the question comes, what do you notice? And it is very simple. You notice that this market, after the break of this structure right here, it came to retest inside before playing out. So coming to our market structure right here, after the break of this structure right here, so technically we were also expected for the market to come and retest to this area before playing out. I know most of the traders out there, they will be telling you always ride the trend. If the market is moving on a downtrend, also just ride the trend. You should be selling. But guys, this is the daily time frame, all right? From here alone up to this point, it is more than 44,000 points. Just a lot of points to just stay idle just because the market is moving on a downtrend direction, just staying idle at up to this point and waiting for the market to sell at this point, it will be just a foolish decisions. So since we know that this market at some point will have to retest inside our areas of daily liquidity, we said, okay, let us see on the lower time frame, let us see if we will get a perfect confluence, a perfect system that will support or that will align with our decision to come back to the daily areas of liquidity before playing out. So we said, okay, let us go to the 1 hour time frame and see how the market is supposedly giving us information on that time frame. Let me go back now to the candlestick version, because right now we need the informations from the candlesticks. We need to see what informations the candlesticks are giving us, because these weeks are very important in giving us information of who is currently strong and who is currently weak. And here I mean it's between the buyers and the sellers, who is strong and who is weak. So on this market right here, let us see clearly how this market had been moving. So we can see right here, this market was moving, providing us with series of lower lows and lower highs. Just a perfect way on how the market is supposed to move on a downtrend direction. You can see here, after the break of this structure right here, the market formed a new lower high right here, and the market broke this structure to form our new lower low right here, making this area to be our new lower high. And what the market did do after retesting to this point right here, it did not come all the way to this point and respect it and pray out, but instead it closed above this area right here. So what does it tell you? This tells you that the market that has been moving on a downtrend direction, right now it is no longer in a downtrend direction. The case of beginner traders, let me draw an illustration for you right here so that you can decide or you can learn more clearly how the market is supposed to move on a downtrend direction and how the market technically after the break of that structure, what tells you that that downtrend market it is no longer valid. So let's say the market had been moving like this. When the market comes and breaks past below this area right here, technically we can say the market has provided you with a shift of series right here, a shift of the market structure series. That means this market that was moving in series of lower lows and lower highs, after the break of this structure, the market is supposed technically to change or to have a shift of series from series of lower lows and lower highs to series of higher highs and higher lows, just like this. So for the case of beginner traders, I hope at that point I am clear and you have understood very well. So after the break of this structure right here, technically, or being more professional, I can say the market provided us with a shift of the market structure. So we said, okay, remember, on the daily time frame, we are looking for a very good system that will support us to move slowly upwards until we reach the daily areas of liquidity before we are selling this market. All right. And on the 1 hour time frame, the first confluence that tells you that okay, this market might actually be going to our areas of liquidity is this shift of the market structure right here. So we said, okay, this is a very, 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 very nice confirmation. So we said, let us see how this market is supposed to move and let us see how we were supposedly waiting for this market to get our entries. So we said, okay, let us see. Since this market is going now on the upward direction, we know how the market is moving in an upward direction. That are a series of higher highs and higher lows, just like this. So we said, okay, even though we will miss this setup, we said, okay, let us see how the market is moving. You can see right here, it started to move higher high, higher low, higher high, higher low. But if you notice very well clear at this point right here, the market closed below this level right here. But remember, the concept of engineering liquidity. I've been teaching you this on my Telegram group, the concept of engineering liquidity. I even made a video on this concept of engineering liquidity. But the market did right here, it provided us this concept of engineering liquidity where the market closed below this structure while eventually played out with our initial direction. So we said, okay, we know where this market is supposed to go. This market is supposed to go in an uptrend direction. And what the market did right here, it just engineered liquidity, taking the liquidity of all retail traders also had the same eyes as me, but did not know the concept of engineering liquidity. So here, lots of stop loss orders were taken out. Probably people will be saying at this point, okay, the market is continuing to sell, and they were afraid of this market and they went out, not knowing what the market did here is just engineering liquidity. So we said, okay, let us see when the market comes to our areas of engineering liquidity right here, and you can see we were lucky enough to get a very perfect price at a discounted rate at this point right here, and our stop loss just below this quick rejection right here, and we insert these positions. As you can see, our first take profit based on this trade that you're seeing on the screen was at this point right here. Why did we enter our first take profit at this point? It is because this is a resistance level. All right, on a resistance level the market might have sold, because we know always sell on a resistance, always buy on a support. So to avoid any surprises, because we are not the one moving the markets, it is only logical to not be greedy, and we banked our profits right here while continuing to ride this trend at break even, meaning this trade was risk free after getting out our money fast. Guys and girls, this trade is just a reminder that success in Forex doesn't come from guessing. It comes from preparation, discipline, and execution. Every great trader you are seeing out there on social medias started where you are right now, doubting themselves, constantly wondering if they'd even get it right. But here's the truth. If you stay consistent and trust in the process, the results will follow themselves. You are closer than you think since you are here at Forex Clubhouse. Do not think about stopping right now. If you have enjoyed this breakthrough and found this video helpful, smash that like button, subscribe to the channel and turn on notifications so you do not miss out on our future videos. And listen, if you want more real-time insights, tips and strategies, then join my Telegram group. I'm sharing valuable content there every week to help you grow as a trader. The link is in the description, so don't miss out. See you in the next videos and bye. Bye.